Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today, I'm just going to do something real simple. Tax day was Monday, and we are now later in the week, and I wanted to talk about how taxes is often an afterthought. And if you don't pay attention to it, you may be paying more than you need to, and other people are paying less. But that's what I've been finding. Most people don't think about it, so you're paying a lot more than you need to. But I'll talk about that when we resume. For those that want to follow me, you can join this Facebook group, Investing 102, where we do talk about more advanced stuff and topics like this. Earlier this week, I posted that my tax rate has been going down and I paid very little taxes and I have a W 2 job. So let that sink in and then you decide what you want to do. So let's start at what is a tax bracket. So let's just keep this real simple. Tax bracket is what is your last dollar taxed at. That's really the simplest way to think about it. So if you're in a 10% bracket, your last dollar, you would have to make under 20 grand for married and single under 10 grand. So if you're married and you're making somewhere in here, you're in the 22% bracket, or your last dollar, if you're married, is in here. So your last dollar is taxed at 22%. But that's just the beginning. Most people don't understand what that all means. Just because you're in the 22% bracket don't mean you're paying 22%. Effectively, you can be paying 8, 9%. And I'll go into some of the details in this video. Here is an article that was done in 2018, Motley Fool. I'm just going to scroll down. While some of the numbers are a little bit old, there is some interesting things that is in this article. How many people have a tax liability? And you can see as you make more money, you have a tax liability. That means somebody in these buckets have obviously learned how to maximize their taxes so that they have a $0 liability or maybe even a negative tax rate, which means they get a refund still. That's what this means, okay? So if you scroll a little bit lower, I'm going to show you what the average person pay based on some average income AGI. So let's say you are making 60 grand this year. And if you, now there's a lot of things that go into the formula, so I can't cover every scenario, but if you saw that 60,000 for, let's say, a married couple, it will put you in a 12% bracket. With that being said, though, you would think, okay, that means you're somewhere in here. But that's not a true statement. If you're a married couple and you file your taxes, most likely you're still going to do the standard deduction. So let's say that removes $24,000. So now your AGI or your taxable income is it's in this bucket now. And you can see people in this bucket, the average tax liability is a lot lower. So you may be in the 12% bracket. If you have 5 kids, you can get that even lower and you'll be in the lower end of the spectrum. If you have 0 kids, most of your money will be taxable and then you'll pay whatever you owe based on your AGI, less whatever deductions you have. So this is the strategy. But there are many things to think about this. And like I said, a lot of people view this as an afterthought. Investment matters too. How you invest, your philosophy on investing, the type of accounts you have, all matters. In many of my videos in the past, I talk about how Robinhood traders don't actually think about this. They don't have retirement accounts or Roth accounts or IRAs. So whatever type of trading you're doing, you're paying ordinary income on your stock market or options trade if you're a Robinhood trader. All other people who do care about that stuff should know better. We trade in a tax deferred account or a tax free account. So therefore, if I made 10 grand trading, I don't have to push myself into a higher bucket, and my trading profit or loss are not counted towards that year's AGI. And therefore, I can still control some of it and not pay taxes, or at least not pay taxes this year. Tax defer means exactly what it means. You pay it sometime down the road in the future. This is why structuring your portfolio a certain way with taxes in mind is pretty important. Again, if you do that, you can reduce a few $1,000s of your tax liability. You can pay less than somebody of your peers. So in summary, if you look at your total financial picture, This is where a financial coach can help you. You can have somebody look at what you're doing today and maybe help you change a few things so that you can lower your taxes, at the same time increase your savings or investment and try to make more money. The whole goal of investing is not just making more money, it's making more money, making money passively, it's reducing your tax liability, because in the end, if you can save another dollar in your pocket for you, that's the goal. With that being said, hopefully you enjoyed this video. Comment below. Hey, if you use TurboTax, do this one favor for me. Go to the tools bar. Under the tools, go to tax history and load that up, and go to the part where it says effective tax. Effective tax. And let me know what your effective tax rate is. Hey, thanks again. Let's do this together. Let's do this $1 at a time and have a profitable day. Bye-bye.